Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing. Most likely going to be gold, silver stuff, maybe some oil. It's probably what people are sharing. I'm going to interject my financial opinion as we go through it, and it's going to be related to commodities, wealth building, and/or financial topics. So let's dive in there. Let's see what people are talking about. If you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com. We have a question and answer session coming up this Sunday at 5 p.m. Mountain Time. That's where I'm going to go into individual stocks, individual companies, why I like particular sectors. And I'm going to give a presentation on the setup of basically debt, oil, all this different stuff. So North Star says gold, as cup and handles go, it's one for the ages. Humongous cup and handle pattern that has developed in gold and and has broken out to the upside. A generational opportunity, definitely. Cup and handle patterns are continuation patterns. So generally you come up on the left, then you create the cup, the handle at some resistance level. The cup can be downward sloping, upward sloping, it doesn't really matter. You get a resistance level that comes through, and we are breaking through that area. This is huge. What does it mean? What does it mean when gold goes up? Generally, it means that inflation or liquidity is coming back into the market, and gold front runs it basically. So insiders know that the Federal Reserve is doing something, or the Treasury of Secretary is doing something, probably in the bond market, and they're creating liquidity to provide liquidity to the bond market. That's my guess. And this is breaking out, accounting for all that money that's being printed. The money, I think, is going to be aimed at declining the DXY, the dollar. So I think the dollar is going to weaken. Gold's going to rip. Silver's going to rip. Palladium, platinum's going to rip. Oil's going to rip. It's all going to rip because they're all priced in dollars. So if they're going to weaken the dollar, might as well buy the stuff that protects you against that inflation. So that's a great chart there. Coming on down, don't look now. Palladium is up 8% this morning. EV narrative changing, plugins, hybrids, ICE will be here longer than we think. Massive short position unwinding as CTA's flip trend programs. Yeah, it's a shoulder, head, shoulder, and a breakout to the upside. I obviously talked about that during the weekly update. There are ways to play this if you are looking for equities, and there's not too many options. So options as in like there's not a lot of ways to play this. So it's like you just pile into these monopolies, so to speak, and just hold on. The inflation that's coming is going to impact this. That's why they're moving. It has less to do with the actual fundamentals up here. I mean, that has something to do with it, but that's not the main driver of why we got a big move today. I think the main driver right now is that liquidity coming into the system. And now money is starting to position for that liquidity that's about to come. That is the big deal that people need to look at. Stop looking at the sector to sector fundamentals so deeply. Start looking at the bigger picture, macro view of what is occurring in bonds and the liquidity that is being created either from interest rates, the debt that's in the system, or liquidity that needs to be created to basically maintain stability in the bond market. All of those things, if you were to kind of dive in and look into it, I think have an inflationary outcome. And that's where people are going to flip. I think we're going to have inflation. I think interest rates are still going to go up over a longer period of time, and money's going to rotate into commodities in mass. In mass. We've got silver here. Well, let's just finish out. We got the gold, palladium. I don't have platinum on here, I don't think, but here's silver. It says, look how well silver held up all of the Fed hawkishness, plus hiking and recent crazy economic data. And you bears are still trying to call for a breakdown of that triangle. Silver's going straight to $65 in 2024 now that rates have peaked and DXY is rolling over. I think he's got all of the drivers correct. And this chart here, if you're a chartist, guys, you should be doing a little bit of jizzy here. I mean, this thing is ready to go. When this thing breaks, it's going to be gone. The opportunity will be gone. So everybody's going to say, oh, silver, blah, blah, blah. Doesn't matter. The chart's here, the setup's here now. Wait for this thing to break and then jump on the train. That's all you got to do. That's all you got to do. Here's momentum. That's Michael Oliver. If you bought gold at the turn of the century, the year 2000 roughly, it has outperformed the S&P 500 total return index. That's even with 4 rounds of QE and countless other sources of monopoly money propping up the stock market. If you notice here, you can kind of draw a line across. We're about to break out of all that resistance to the upside. This is going to be a big, big, big move. Now, the S&P 500 could still go up too. I'm not stating that it has to go lower, but if we go into some large inflationary outcome, which I think is going to be the case, you want to be inflation protected assets. So what does well under inflation? Gold is not the best inflation hedge. There are better inflation hedges out there than gold itself. And of course, I'm in those inflation hedged positions. So here's Gary. Let's read through some stuff with Gary here. He says, I don't like things that go straight up late in an intermediate cycle, like uranium, as they always end up going straight down when the profit-taking event begins. I do like things that go straight up at the beginning of an intermediate degree rally, as it is a sign of smart money is panicking to get into position early ahead of the big move. And he's talking about gold. So basically, money coming in right when you're basically breaking out is where you want to be. That's where smart money's positioning. It's on the breakout. The ones where they have run for a little while, he calls it an intermediate cycle kind of maybe top or whatever. He doesn't like chasing the move. And I agree with him. He's completely right. This guy, he's been in the markets for a while. You can tell by how he writes. Now, I like this. Eric says, you do realize that sentiment in silver and miners are still crap, right? Maybe sentiment in gold improved a bit, but a lot of experts and plebs rather buy BTC for higher beta. And Gary says, classic example of dumb money buying something going straight up late in cycle. They will get caught at the top just like they got trapped in uranium. Look like a genius for a few days or weeks and then look like an idiot. This is why almost no one ever makes money off bubbles. He's completely right. All of these people, this is Eric, I don't know who this person is, but that is the quintessential answer from retail. Well, the plebs and all that rather buy BTC for higher beta. Guys, that's not where you go at this point of the cycle. You should have bought that at $20,000. I don't know what to call it. $20,000 some digital bits, some bits or whatever it is. So you're late to the game. You don't want to jump late in the game. You jump late in the game, that is where you can get hurt and have big losses. You have to be early. You have to do exactly opposite of what this guy's doing. You want to buy silver and the miners when they're crap. That's exactly when you do it. And then you wait for the dumb money to come in. That is exactly how you play the game. Gary's right, and this dude is, well, wrong, in my opinion. So coming back, we've got Justin here. He says, energy stocks also setting up to outperform the broad market. Energy XLE, which is an ETF, and that's the bigger companies, versus the S&P 500 ratio makes it pretty clear. The best part, it's extremely easy to identify the industry leaders here. So we've got a bullish divergence on the relative strength indicator. You can see that we put in a bullish engulfing here, and we're starting to work our way on up. Looks really good for a lot of these energy stocks. Now, when you go down the market cap to mid caps and small caps, there are some insane opportunities in energy. The way that they're priced, the way that their patterns are, the fractal sizing, absolute opportunities in the small cap and mid cap regions. Huge moves are possible. They're going to dust XLE in my opinion. So here's JSG says bullish EIA data for March 6th, 24. Total commercial petroleum stocks are down 5.5 million week over week. It's a 14-month low. The lowest data print since January of 23. The implied WTI fair value price of $83. We are $3 undervalued. Today's increase move in WTI price supported by the fundamentals. So we're still slightly undervalued, but we're pretty much just below average for the pricing of commercial inventory levels versus the price. I like this data. I like it a lot. Let me go to JS. Okay, I'm already following. Good. CNQ is clearly on its way. That's Canadian. What is that? Canadian oil or Canadian natural? I can't remember. Over the next 5 years, earnings likely double, dividends likely doubles, and multiple likely doubles. What might that mean? He's completely right. I talk about this and how this works um, in our question and answer sessions. One of the trainings I did, I talk about share buybacks, dividends, and the earnings multiples that you can potentially get. Here's the setup here. He's got this completely right. We've got a secular bull market that's occurred. Squeeze it in just a little bit more so you guys can see all of it. This is a secular bear that occurred. We went into a declining interest rate, declining dollar environment, huge bull market. Then we went into another secular bear market where we consolidated. This was the end of that consolidation, and we've broken out and we're starting to work our way on up. This is Canadian Natural Resources, which is an oil company. It's one of the leaders in the sector. So what you want to do is if you want to play this, like let's say you want a highly leveraged company to the oil price, like a high cost producer, you look at your leaders, like this one here, CNQ is a leader breaking to the upside. Then you look backwards at the small guys that haven't broken out yet. That is your opportunity. You buy the laggards that might be a little bit higher cost producers, they're smaller market caps, and they're very leveraged to the price of oil. We could see a monster move in oil here over the next, he says, 5 years. Totally agree. And there are small companies that are doing share buybacks, they're doing dividends, they're doing a little bit of both. They exist. And the setup here is absolutely ridiculous in an inflationary environment that I think is coming, where these will just absolutely blow the doors off of everything else in terms of returns. What some people always say, well, okay, well, what kind of returns? I think 5x, 10x, 20x from where we are today is still possible in a lot of the names. Some have already gone up 4,000% or 3,000%, and I think it will continue to go up. And that is just a move from the bottom because oil and the companies were so stupidly cheap at the bottom of the market. Just absolute mispricing completely in 2020. So as Robert Yager mentions, for all the technical folks, there's a lot of them. Here's the chart showing oil is above its 200 and 100-day moving average. So we are starting to break back. We're going to get a golden cross again. You get a death cross here, but it wasn't a legit one. We got a golden cross coming up where these all cross each other to the upside. So we're sitting on top of it all, and hopefully we can get a big move out of oil this summer, hopefully. Nat gas production playing with my emotions and now down to 98.5 billion cubic feet per day. What's the new normal? Is this real when tight? You can see the drop from about 104 million all the way down to 98.5. Huge drop in natural gas production. Hopefully, it stays down for a while and cleans up the inventory. And you know what's going to happen? They're going to overdo it to the downside and then they're going to swing it all the way back up and probably create a gigantic move to the upside in natural gas. That's probably my guess. Here's Oxy, another leader. So I'm looking at the leader companies, seeing what these oil companies are doing. Oxy's in a large descending triangle pattern and is nearing a key resistance level, which could lead to an upward breakout. If Oxy surpasses this resistance level at about 61.60, the next target is the triangle's upper resistance around $63. Breaking these levels would indicate a shift from a downward to an upward trend. Totally agree. And here we are, we're at resistance to double bottom, and we're about to break to the upside. A couple of resistances right above us, and we'll break through them, I think, this summer. and we're off to the races. Here's URA, uranium ETF. URA is currently moving sideways with a bearish flag. This pattern often suggests that the price might continue to go down after this sideways period. There's also quite a bit of resistance above the current price. URA bulls want 28.80. So this is a flag pattern. I've actually have the same type of analysis in my daily technical analysis where we could break to the downside. Now, does that mean that I should sell my shares? No, it does not mean I'm going to sell my shares. But what it might do is it might delay some of my purchases to try to get the best price possible. That's really what I'm doing myself. Coming on back. We've got, if gold's already over $2,100 now, what happens when the Fed finally cuts? I don't think the Fed's going to cut rates. I don't think it's going to cut rates. So I think it's going to try to manage liquidity in the bond market. And I don't know if it can cut rates meaningfully at all. I think it's going to be sideways, and maybe they eke out a couple of downward rate cuts later on. Maybe we'll see. Global platinum deficit in 2024 will be deeper than previously expected as mines hit by low prices for palladium and rhodium cut supply. So the platinum deficit in 2024 to be deeper than expected. And that's with palladium and rhodium being down and the mines cutting back production. And guess what metal I like? A little bit of my boy Platy is correct. It's a great setup for the physical metal. Nothing stops this train. So, Powell, we are not looking for inflation to go all the way down to 2%, but we do need more evidence, is what he says. Here's U.S. crude storage back on track. This is a good sign. You can see this thing is generally we build during the spring months, but we're kind of turning over already. We could be at very low levels for U.S. crude storage. We don't get on it. Apple, highway to hell. We've got a big move to the downside, breaking through the 200-day moving average. We're getting the death cross is what we call it, where the moving averages start to cross over the 200-day. We have more further selling pressure going on today with a bearish engulfing on Apple. So maybe this is the beginning of a tech rotation where money rotates out of tech and starts transferring into a lot of these inflation protected assets. Translation, Paul has no idea how to deal with the national debt increasing at 1 trillion every 100 days. He has no idea how that ends, when it ends, or how to manage what that end may look like. So Fed Powell says we should be prepared to be surprised by next chapter in the economy. And that's probably how this guy is breaking that down. So I agree. Inflatione is coming. New relative lows for all of them today. Apple versus the S&P, Google for the S&P, and Tesla. Down, down, down for underperformance. This is a bear flag for Tesla going lower. We've got another flag here, or a topping pattern. And this one is it's a Batman top, double top, that's starting to move lower. So is tech really rolling over? I think so. And eventually, I think it will reach out and get some of these other high flyers like Nvidia, maybe, or SMCI, or what other other companies are up. It'll eventually get there. Here's copper. Oh, bloody hell. Now copper too. Let's watch for a break above $4. Yeah, we're right at that resistance line trying to break out for copper. I love it, boys. I love it. Eric is remaining bullish on energy stocks. We believe that an $80 WTI base case remains reasonable for 2024. And we can see the drawdown in total global oil held in inventory, onshore oil and on water. They're still coming down. We'll probably pull this down even further for the summer. So got products. So here's the surplus year over year, and product storage is gone. So we had a little bit of a surplus compared to other years, but we are drawing down gasoline, distillate, jet fuel through these weeks. So we've got a nice big draw going on there. Christine says for nearly 3 weeks, oil has been dancing around the 200-day moving average and slowly trending higher. $80 a barrel WTI is a huge psychological level for investors. And as we edge into summer driving season, this is bullish for equities unless international weakness appears. So that's her opinion on that. SRS Rocker Report, he says average Bitcoin mining cost 63,309 yesterday. This seems to be bad news because Bitcoin halving event next month makes it twice as expensive to mine Bitcoin. It's no wonder the Bitcoin miners aren't experiencing the same euphoria as Bitcoin itself. And they've basically, here's the average. It's right there. You can see it, 63,000 or 66,567 is Bitcoin. And then the average mining cost is 63,309. And here's the Riot blockchain. It's just continuing to go lower because of all the halvings. Not a great spot to be invested in with all these halvings. And that's what I've got for today, guys. So we'll end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. 5 p.m. question and answer session coming up Sunday. We still have a discount going on. LEAP LEAP. If you'd like to try out the membership, it is 50% off the monthly membership for the first month to try it out, or you can sign up for the yearly membership and get you a pretty good discount. So we'll see you this weekend, guys, if you're part of it, and we'll catch you next time. This is Finding Value.